Welcome back, my friends, to the Predictive Playbook. As you can tell by my screen behind me, we're going to be talking about foreign exchange and specifically Bitcoin. And of course, I have my sidekick and good friend Steve Merrill along to help guide us through the cross currents that are always there in the foreign exchange markets. How are you doing today, Steve?
Doing well, John. And it's funny, most people don't think of Bitcoin as a Forex trade, but when I group my categories for my non-diversified, my very diversified, non-correlated trend following portfolio, I do have Bitcoin in with the currencies. Yet I trade it as its own asset class as far as my risk management. I non-correlated, assets like soft commodities and obviously currencies are not very correlated. Commodities aren't very correlated with anything, but I do have a group with currencies, yet it's kind of a one-off. It's not correlated to the Australian dollar or, the euro, the Canadian dollar. Those are all like, 50, 60% correlated with each other. But you're right, because, we're trading a basically non-U.S. dollar against the U.S. dollar. That's what Bitcoin is. And,
Right.
It's also,
Yep.
you could put it with gold, I guess, but it doesn't track with gold, and gold doesn't really correlate with anything either. But they're all kind of hedges, inflation hedges, and other things. So that's what's so cool about it. It has a lot of purposes. It might be hard to really give it a fundamental value, but it has a lot of logic behind how it trades.
Yeah, it's just a medium. It's as simple as it gets. It's a blockchain medium, and it does have a long-term purpose for sure. There's no question. We just talked about Amazon implementing Bitcoin and maybe Ethereum, I believe was the other one, by year end. So people can pay for goods and services at Amazon using cryptocurrencies. So it's pretty big stuff. It'll never, and I don't think in our lifetime it'll ever outdo what is the foreign exchange market now, because there's several $trillion traded every single day, 365 days a year in the Forex. And that would be the Japanese yen, the euro, Canadian, the Aussie, New Zealand, the big boys. So it long way to go for Bitcoin to catch that. But Bitcoin does trade. It has a market cap of several, tens of billions of dollars. And every once in a while you get days where it does exchange hands at about 500 million to a billion. So that's very impressive. But the one thing I guess we want to talk about today is first the reaction, and I'll let you handle that, and then we'll go to a new technical reading. It's called Profile, and it was developed originally by Peter Stoudemire in the bond pits back in actually I think it began in the late 70s into the 80s. And after you do your chart analysis here and this big recovery that we're seeing in Bitcoin, I'll share with what this profile is. And people listening, you don't have to have machine learning. Like I talk about machine learning, right? And a lot of times people mention those words, they mention artificial intelligence, and honestly, they don't know what the hell it is. They don't know the difference between deep learning and machine learning. And they've been around some of these tools have been around since the 1950s and are still valid to use in applications. And it's not new rocket science. It's like nobody discovered gravity just last week and now, oh my God, this is great. But it is a tool that's been around for a long time, and this profile has been around for, well, at least 40 years, and I think it's still very, very valid. So I'll let you talk about the market, and then we'll talk about the profile.
Yeah, just big picture, first of all, whether it's the stock exchange or commodities or now Bitcoin, for the past 100 plus years since we've had all these markets, there's been one common element. It's greed and human nature. So that's what all this is, bottom line, is that, they might be machines trading, it might be machines making the trades, closing the trades, but it's still real money for real people. It's ending up somewhere. And all this is price action. We talk about it every day. It's price action, whether you're looking at a daily candlestick or you're looking at the volume indicator there on the side that shows which prices have had more volume. This is all price action. Those are real trades for real money, and it's always going to be that way. There's always going to be a buyer for a seller in every trade. And today in Bitcoin, Thursday, August 5th, we've seen a pretty big intraday reversal, which I think is definitely worth talking about. It got to the low around 37,000, about 8:30 a.m. Eastern time Thursday morning. Kind of treaded for a couple hours between like 7 and 10 a.m. If you're looking at the 1 hours, it's really telling of just dead even doji candles, like four of them from 6 a.m. to 9:30 or so. And then right as the stock market opens, it takes off. And it goes from a low of about 37.5 up to a current high as we do this Thursday afternoon, August 5th, to 41,000. And that's a pretty key resistance level. We'll see what it does here. Once again, we have the weekend coming up after tomorrow where the future markets will be closed for 2 days. So we'll see it like we did 2 Sundays ago where we had that gap open. But you're looking at that hour chart right there. You see about 6, 7 candles to the left. You see like 4 little like dojis there at the bottom right there where your indicator is. And then it just explodes. And that's not a coincidence. It breaks out. In fact, I'll give you the exact time of the breakout. The bottom was about 8:45 a.m. Stock market opens 9:30. It went up ever since. So basically, right when the stock market opens at 9:30 a.m., Bitcoin takes off. And the S&P is up a teeny bit today. NASDAQ as well. They're both near all-time highs still. So it's very interesting price action by Bitcoin here, to say the least.
Yeah, and it's breaking through. This trend is actually the trend off the dailies that I drew yesterday. So we're breaking through that. And based on the hourly profile here, we're making an extension on the profile, which is encouraging. And then what this does, it gives you another visual aid of how the market is trading, where you're going to get support and resistance, and I guess more importantly, where you expect it to occur. So here we'll go back to the daily. There we go. And then I'll shorten it up to here. So you can see this candle for today is extraordinarily bullish. It's an engulfing candle. We actually established a lower low than yesterday. And now we got a candle. I mean, not a candle. We had a hammer on top of this engulfing candle. And this is the highest close we've had since probably right here, which was May 18th. So this, yeah, it's definitely the highest close we've had since May 18th, which is something.
Yeah, it's very telling.
Yep.
Yeah. 2.5 months. I mean, once you get over a month or so, it's very telling. That's 2.5 months. So, we'll see if there's any follow through. But look, I've been bullish Bitcoin the last couple of weeks since we did a show 2 weeks ago, and it is in the low 30s. I really think that 29.30, and if you look at the lack of volume below those numbers there, below the high 20s, low 30s there as well, you can see how that's the long-term support. The question is, though, do you get in now at 40, 41? You kind of missed the boat, obviously, when it was 32, 34 a week ago. But a lot of people, I think, have gotten in over the past few days. We've done these shows. We've said, look for the pullbacks. You got those pullbacks a couple of days ago, and I think it's set to run. It is definitely going to break out above 40, 41. Whether it happens the next couple of days, I don't know. But I think over the next week or two, it will be above there.
Well, it gets back to your term, catching the falling knife, which is very common financial adage that we use in sports betting shows too. And you don't want to be catching that falling knife. The falling knife was right in here. All these where it's long wicks. You don't be brave and think, okay, well, the bottom's going to be right there, because you're not going to catch the bottom. If anything, you're going to catch your finances a pretty serious flu. Is about the only thing you're going to catch by trying to do that time and time again. So I don't mind buying at 44 if that's something we end up doing possibly as early as tomorrow, because I think now the structure is a lot more positive and the story's changed. The story back here was not good. It definitely was not telling you to buy at any time during this. Now we're starting to get some constructive patterns built in here that support the fundamentals and the belief that, you and I both think that this could trade 100,000 at some point in time. When that is, I don't know. It could be 5 years from now. It could be, it could be 16 months from now. Nobody's that smart that they can pinpoint when certain trends are going to reach certain levels. You follow the story day by day. It's just like reading a book. You read a chapter, you put the book down, you open the book the next day, you read the next chapter, and on you go. So this area here in the profile, and this was developed by an individual named Peter Stottlemyre, and there's all kinds of books out there on it. You get these bell curves. So the highest activity, in other words, the most Bitcoin futures that exchanged hands above our levels right here is this level right here. That's the peak. So when you get troughs, it's usually either during rapid rises or rapid declines. And you can see that this trough here was right here during the collapse. So that's what you look for. So the first time through here, you're going to have intensifying selling pressure between the high today, whatever that is, and maybe up here around that 44,000 level, 44,200. But what I want to see happen, Steve, is this thing to get up to in here, back down here, up into here, and what will happen is this blue mountain is going to then go like this, and the gray area is going to disappear, and then we're going to have one large bell curve that's completely filled, and that will set the stage to go to new highs, and then we'll have to see where we are at that point. But I do want to be careful not buying it today, because this candle, we should get a retracement back down to about here tomorrow, which is 38, say 38.5 as a possible buy for our $50,000 portfolio that you and I put together. So that's my recommendation, and if you're in agreement with that, that's what we'll try to put together overnight. We'll buy one contract and see how it goes. But do some research tonight if you people have time on the profile, and you can direct message either one of us and ask questions about the profile or anything. You can ask us questions about anything. We'll be happy to answer them.
Well, yeah, and comment below here on the YouTube channel. The comment section below is a perfect spot because we'll check in on that as well. So please comment here on the show. And it does look like, just looking at the big picture, I mean, as we speak here live, Thursday afternoon, August 5th, it's sitting right about 41,000, the high of the day. And you go back the beginning of the week, 41.5 was the all-time high for the week. Last week, 49, 41 basically. The week before that, 49. It's hit 40,900 twice. It's hit 41.1 like once, 41 now. It's like the fourth time it's at that resistance. So, there's two ways it could go now. It's going to trend back down, but if it breaks through, if it closes, 41.5, 42 tomorrow, my guess is, I think when we do a show next Monday or Tuesday, it's going to be in the mid-40s. I don't know exactly, and my guess is it'll probably happen over the weekend. That's what we saw happen 2 weeks ago. It closed on that Friday when I gave this, long-term bullish indicator here on the show. It was about 32,000, and then it opens 34,000 Sunday night, and then by Monday, it was basically, or by the end of like Monday, that trading session, it was like 39. So it went from 32 to 39 within one trading day from Friday to Monday there. I have a sneaking suspicion that's going to happen again, and that's just what makes it kind of tricky as far as getting in, getting out.
Yeah, and I agree. This area right here where my pointer is, I think is what is that level? That is, that's about 49,000. And, we've seen rapid moves in Bitcoin. It wouldn't surprise me at all if we had a show next week and it was up here. So you're probably asking, why don't we buy now? And it's because this right here. If it was trading up here, even though it's 1,000 higher, I'd have
I agree.
Far more confidence to buy it.
Yeah, I totally agree because once again, there's like 5 or 6 daily candles the last 2 weeks that have hit right at 41,000, and none of them have broken through. So I totally agree with you. I would rather see the breakthrough because right now this could very well be a ceiling. I want to see it break through that ceiling of 41,000 because then when you break through the ceiling, then it becomes the floor. It becomes the support.
Yep.
And we also could have a very tight stop loss, right there as well in case it goes the other way. But long term, all these trades are risk reward. Everything we're doing has had a very positive risk reward. They've worked here in the short term, but long term they have a lot of expected value still. I still think 28, 29, 30,000 is the long term support. I said it last week. It has held so far. It's held for weeks actually. So even if you were to get in now at 41,000, your long term risk is maybe 10 or 12,000 to the downside, and if it goes to 100, 200,000, obviously a huge upside. So it's not, we might be overthinking it, to be honest, but I agree with you. I'd rather, see a breakthrough and be a little more comfortable that this trend is really powerful to the upside and give up another 1,000, get in at 42 or something in case it drops back down to 37, 36 again. In that case, we get in also, we save at a discount because historically these things do seem to pull back a couple times before they break through.
And real quick, Steve, we talked about the 10-year yesterday. Let's take 30 seconds here. We had an engulfing candle right there where the pointer is. and we had a bit of a retracement like we expected. But we did short it on the show yesterday at what was it, 134.27, I guess, 28, somewhere around there. So now we're about half a point lower. So that's $500 per contract. That's a $2,500 paper gain so far. So we're trending well. Now, if I'm looking at the profile here, you can see this huge, kind of cloud. I call it cloud, so it's bell curve. I like calling it a cloud. But this right here is big time support. But if this market goes down to here, Steve, at this level, we're going to be happy campers anyway, and the profile would be telling us to cover shorts. So we'll see how this thing goes. But we got a long way to go before we get back to these levels. It'll probably take 2 to 3 weeks, should that happen.
Yeah, and keep in mind the monster move that we saw back in February, basically March of 2020, right when the COVID scare started. We're still well above where this was trading before that. So there's a lot of downside still that we could get. And it's just, and we've seen a lot of like candles the last 3 days, or the last 3 weeks rather. If you look at a weekly, a lot of inverted hammers where we have a big spike, close lower, spike, close lower. So that just tells me that the long-term trend is exhausted. And then you look at the daily candles, we've had a couple of those over the last 2 weeks as well, where we had the spike for the all-time highs, but none of them closed near those highs. So it looks exhausted to me. And then another trade, just like the crude. I mean, we don't try to time the market. We try to time it maybe a little bit more than long-term investors. But the crude trade's spot on. The note trade's spot on. I mean, they've both dove in the next day after we've recommended that here on the show so far. So off to a good start with the 50K trading account for this show.
Yeah, and that's a good thing because then nobody would watch if it was going the wrong way.
Maybe our viewers are moving the markets. Are we big enough yet, John, where we're moving markets?
I suppose so. I mean,
You never know who those 5 or 10 people are. They could be huge hedge funds. You never know.
I'll have to mention this to Tony Finn today on the show that, bulls make money, bears make money, pigs get slaughtered. That's true. If you keep that kind of mentality in sports betting and you're playing the baseball diamond, it applies to everything. It's kind of like that moderation word we like to use. Everything when it's time to do it.
Well, exactly, and that's what it gets back to what I said at the start. Over the last 100 years, a lot of things have changed with technology, but one thing remains the same: human nature, especially greed, fear and greed. I forgot to mention fear, and that's exactly why the markets always drop faster than they go up, and that's what we're seeing with the S&P. It's been ticking up like that roller coaster, tick, 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 and that's what's going to happen at some point. And we'll be ready to go short when it happens. And I think you and I have been waiting for it to happen and feel like it's getting ever so closer every single day. And it just looks like that roller coaster is starting to stall off. Even the new all-time highs are so small, and they just kind of roll over. And there's just no buyers left. I mean, that's the other thing, too, that's always been true for 100 years, is that there's a buyer for every seller. And if everybody is long the stock market, there's only so much more money. And, the stimulus payments have come out 2 or 3 times over the last year. That was a huge boom to the stock market in hindsight. At the time, I couldn't understand how the S&P is rallying during the shutdowns, but in hindsight, it makes sense. The big companies that control it, like S&P, is 20% of its 5 companies. They got stronger during the shutdown. The shutdowns were good for Apple, Netflix, Facebook, Amazon, especially.
Target,
and Walmart. And so all the money, that was flowing in, people were putting into trading accounts. They're ordering stuff off of Amazon, but that's going to stop. It has stopped. It has to stop at some point, and it's, there's a lot of downside risk to the S&P. We'll leave it at that for that one. We can do a segment on that, next time as well. But I think that's going to be our next great short trade. Oil and the 10-year note have worked out so far. Bitcoin worked out for us months ago. We called that one when it was in the high 50s. Now we're looking to get long. We're looking to get short the S&P. We are already in the trading account, but we'll probably be looking to add to that with the NASDAQ and some other options as well.
Yep, absolutely. Well, I'm going to get ready for Manny's Pub. Manny's Irish Pub. Joe D'Amico is going to be on. Nice. And it's archived, so you definitely want to watch the beginning of that show because the guy has the most amazing energy of many of our guests. And fits right in there with Tony Finn and Rob Vito and I kind of sit there and just smile and enjoy it.
Yeah, give them all my best. Give them all my best because Joe definitely brings the energy.
Oh, he does, man. He does. I mean, he could be selling me a house in the middle of the desert, and I would say, okay, I get it. All right, how many? But anyway, thanks for your time, Steve. We'll see you again tomorrow. So on behalf of Steve, myself, the WagerTalk.com, SportsMemo.com, and the series of Predictive Playbook shows, may all the trades be winners for you.